So you want to know how to day trade. You probably saw an advertisement or you saw someone online post maybe a tweet about making $250 in 32 seconds. Trust me when I say this, it is completely possible. I've done it before. I've done it several times. I no longer day trade, but we'll get into that later on. But let me teach you how to day trade. It only takes 10 minutes to learn. Forget about what anyone else has told you. Don't buy into some online course. They are all scams. Everything you need to know to make money day trading will be gone over in this video right now. All right, so the very first thing I need to show you, and you will have probably seen this in other places, and that's because this is like the fundamentals of day trading. Supports and resistances. Actually, let's use a different color. So say this is a stock, right? It's going up throughout the day. It doesn't have to, it could go down, but you could draw lines of where supports and resistances are. There, and there, right? So you have this channel right here, you have this channel right here, and this right there, where that little X is, that's a breakout. So the way people day trade is they start to see a pattern forming. So say, you know, the stock's going up, down, and you start to see, okay, here's the resistance, here's the support. I'm gonna buy right here, and then when the stock gets not at the top, a lot of people make the mistake of putting in a sell order at the very top because the stock doesn't necessarily have to do that. Maybe it turns around only halfway. They put it a little bit below the top, right there, right? So you buy in here, stock goes up, whatever, 50 cents, it hits your target, you sell, you're out, you made money. 50 cents may not seem big, but let's say you're buying 1,000 shares, that's 500 bucks. And this can happen within 30 minutes or even 30 seconds. You got more volatile stocks, it can happen very quickly. So that's one strategy. Another is people look for, this is called a breakout, right? So if it goes above this, then that's where they're going to buy in, and then they want it to break out to a new resistance. So breakout, start hitting there, chopping around, they know, okay, let me get out. So they get out, maybe this is a 50-cent difference as well, maybe it's more, right? And that's pretty much, this is how all day trading works. Wherever you go, wherever you look at, you will see that there's support and resistance, and people are playing them off that. They're in and out really quick. They make a quick profit that way. Now, you may be thinking, Keith, I already know that. I've seen that in a million other videos. I just wanted to cover that just so we're all on the same playing field if there's anyone watching who didn't know that. But now we're going to reveal that one secret. It is the easiest, dumbest thing ever. And I don't see that many people actually implementing this strategy. So let's dive into that strategy, and then I'll show you some real examples. Right now I'm recording this while the market is trading, so we'll jump onto the computer and I'll show you some examples of exactly how this works. All right, so there's two possible outcomes. You could either win or lose. We all know that, right? Because the market is random. You can win 50% of the time, or you can lose 50% of the time, right? So if you make, say, 100 trades and you win 50 of those trades, say $500, and you lose 50 of those trades, say $500, you're left with $0. Here is where the key is. It's right here. As long as your wins are greater than your losses, you could actually lose more than you win and still make money. Here is what I mean. This is done with stop orders. Again, I'll show you on the computer. But if you're always aiming, if your target to win is always going to be 2 times what you are willing to lose, it is risk to reward ratio. Here's your reward. Here's where you're allowing your reward to go. 2 times the height of whatever your risk is. So say your risk is $100, your reward is $200. So you could either lose $100 or win $200, right? So as the stock's going, as it's going, it hits there, boom, you're out $100, right? Out 100. You trade a different stock. It's going, it goes down, it goes up, down, up, boom. You're now up $200, right? So now you just netted $100. That's the key. Let's jump over to the computer and I'll show you exactly what I mean, how you could visualize it. All right, so we're gonna use Etsy as an example, right? So we're gonna jump over to the 3-minute chart Whether you like using the 3 minute, 1 minute, 5 minute, that's really personal preference. I, for one, think the 3 minute is one of the better ones to look at when day trading. And here's what happened, right? The stock had a pretty decent drop in the morning session, right? Within the first, under 30 minutes, it dropped from $78 all the way down to $75. So this stock could be on some kind of watch list signal. As you can see over here, negative 3%. It had a bigger drop than all of the other stocks on my watch list. So that's why I would go for this stock, right? So you're not picking some random stock out of thin air. You want to see these stocks with these huge price movements like that. So what we're going to do is we're going to draw a line of where we found a resistance. Now, as we know, the stock went up, right? But we're going to pretend it's still the morning and maybe we only see like these first couple of candles. And we could see, okay, there's a support forming right there. So let's make numbers real easy. There's a support at $75. So what are we going to do? We are willing to lose, how about 50 cents? So all the way down to $74.50. But then we are willing to take gains at $76. That's it. That's all you have to do. My risk to reward ratio, my reward is double my risk. So even if I lose money on this trade, I'm only losing half of what I would win. And if you win 50% of the time and lose 50% of the time, you're still going to be on top. That's math, that's statistics, that's how it works. So if we play this out, you can see right away, boom, that hit up. Actually, let's see if that candlestick actually made it to that $76. And it did. What you can see in this top corner right here, when I hover over this candlestick, you can see $76, right? Let's say we entered this trade a little late. Let's say this candlestick was forming. Well, we still see a support right here and we see a resistance here. So what we would do is we just play it just like this again. It hit that support. That's when we would be triggered in. So when we hit $75, we are buying into this stock. Say we're buying 500 shares. So yeah, you're thinking, that's a lot of money. Well, that's how you day trade. You need a decent amount of money. So 75 times 500 shares, that's $37,500. So you're putting that in, which you need $25,000 a day trade anyway. If you want to be a pattern day trader, you need $25,000 to do this. So you buy in, and if you have $25,000 and you're using, say, TD Ameritrade, you have 4 times leverage. So just having the bare minimum of $25,000 gives you the leverage of $100,000. So $37,000 in a trade really isn't that expensive. So again, hit right there. You bought in at 75. It went up, boom. You clock out there. You make that next $500. You may be thinking, well, it kept going up. I could have made $1,000. That's the secret. You don't want to be greedy. You want to know when to get in and get out as quick as possible. Even if the stock continues to go up and you could have made a killing, that's all hindsight. Don't worry about that. Just worry about you made $500 in, let's see, 3, 6, 9, 12, 15 minutes. Where else are you making $500 in 15 minutes? Don't be greedy. Now, it's not always going to work out in your favor. Let's jump over to a different stock. Let's take a look at Square. All right, so perfect example of a losing trade. Actually, this could be a win and a lose. Let's say we wanted to play Square, right? And we could see in the early morning it bounced and it went up. So we already have our supports established. So let's say support is around $88.85. Where's our reward going to be? Well, it went all the way up to $90, but we're not going to be that aggressive. If we're at 88.85, maybe we would want it to go up 50 cents. So $89.35, which is right there. So if that's our reward of 50-cent spread, where's our loss? That's only going to be 25 cents. So that's $88.60. So right there is where we're willing to take our losses. So as you can see, the way this played out, if we saw that happen, it went up, and maybe it's been chopping around here, and this is where we executed the order, right? We put in our limit order, it dropped down, boom, it hit right there. We are now in this trade, traded up, it actually jumped, right? Well, we probably would have gotten out right there. Right at the top of that candlestick, looks like it hit that $89. We're out. Who cares if it went up more? That's not the point. Let's say we wanted to play it again. Goes down, hits right there, goes up, just misses us, goes all the way down, and we're out there. So we took our small loss. So there's our win right here. Here's our lose right here. The same exact play, right? All right, so let me lay it out real nice and simple. Let's say you make 20 trades, right? So your reward is 500, your risk is 250. You win 50% of the time, you lose 50% of the time. So here you go, right? I have, as the formula, count cells B2 to B21, and then that is C2 to C21. So that formula is just counting how many numbers are in here. So as you can see, if I add another 500, that goes up to 11, right? If I subtract it, it goes down to 10. And then right here, let's say I add another 250, goes up to 11, get rid of it, goes down to 10. Nice and simple. And then right here, this is just taking the sum of all the wins and the sum of all the losses. And then this is just subtracting the wins from the losses, right? So that's how I have this all set up. As you can see, 50-50. You win 50% of the time, you lose 50% of the time. It's 5,000. Losses are 2,500. Your total is 2,500. You could easily make 20 trades in a week. So you can make $2,500 in a week. People do it. Let's say you didn't win as many times, right? So let's take away some wins and let's add those into losses. 250, 250, whoops, that's 350, 250, and 250. So look at this. You only won 7 times and you lost 13 times. Your win ratio is only 35%. You were winning 35% of the time and you were losing 65% of the time. You're still coming out on top. You're still making money. So this is how day traders do it. They know it's a numbers game. They get that. So they don't need to win all the time. In fact, they could be a pretty bad day trader and they can only win 35% of the time. So if we do the math right here, so you can know your win to loss ratio, 7 divided by the 20 trades, it's 35, well 0.35, make that a percentage, 35. And then for the 13, just bring that over, 65%. So your wins, 35%, losses, 65%. You are still coming out on top. This is how day traders do it. But now you're probably wondering, why is it that you always hear people losing so much money day trading and it never works? The number one reason of why it doesn't work is because of your emotions. Just imagine sitting in front of a computer, watching your money go up and down. Maybe you lose $100 in a minute, in a second. You put a trade in, boom, you're already down $100. Let's say you're day trading and you lose 5 days in a row. If we look at the example here, this is still winning, right? But you have 7 days in a row of losing. Imagine losing 7 trades in a row. You're feeling real bad about yourself. You're thinking, I can't do it. This isn't cut out for me. So then you give up. That's why people can't make it day trading. It is their emotions. They can't handle their emotions. They can't handle seeing their money drop like that. So that's why they decide day trading's not for me. I can't do it. And that's the biggest flaw of humans. It's emotions. Day trading can be done. People can make money off it. I tried it. I felt on top of the world when I was putting in some trades and I would make $250, $350, $500 within a couple of minutes. It was awesome. But then the next trade, losing $250, beat myself up over it. I felt awful. So that's why I stopped day trading, because it is an emotional roller coaster. I'd rather just put my money into the market, passively do it where I don't need to worry about it. I could go to sleep knowing that, in the next 10, 20, 30 years, my money will compound over time and I'll have $1 million plus. I like that strategy better. It's the get rich slow strategy. A lot of people don't like that, but I've come to terms knowing that that is the best way to do it. That is the safest way to do it. So if you want to day trade, there's 3 things you need to look out for. You need to learn support and resistance, which is real easy. Anyone can do it. The example that I showed you on the whiteboard and then the 2 stocks, it's that simple. And then your risk to reward. I'm not saying this is the only strategy. There's a million other strategies, but the whole risk to reward, that's the key to it all. As long as your risk is smaller than your reward, you do it over and over and over again. And if there is truly a 50-50 shot of you winning or losing, you will come out on top as probability plays out. That's just how it works. But the one thing that keeps people from actually winning in the market is their emotions. Their emotions suck. It controls what they do. I mean, that's all the market is. You're just seeing human emotion on a chart. But that's my thoughts on day trading. Let me know what you think about day trading. Have you tried it? Are you willing to try it? Have you won or lost money? And if you like this video, give me a thumbs up, hit subscribe, and I'll see you in the next one.